saving for your first home, and also home purchase breakdown.
Right. So if you want to save money, you need a goal, you need a number. So that's what we're kind of breaking down for you. How much are you going to need in order to save? We can give you different ways people also pay for these homes as well. So we want to really, really quick down. Again, we're going to recite what we say a lot. A mortgage payment is going to be principal,
which is the amount of that you borrow to buy your home from a bank, lender, whoever you're using. The interest rate is how much the cost to pay to borrow that money.
Property taxes is the next one. That's how much the government and the state, the county is all charging you to own a home in that area. Property taxes.
And of course, the homeowner's insurance, the last part, is protecting your home against any damages, because the lender always wanted to make sure that they have the money that they give you is in a safe place.
Right. Last thing we're going to mention is a maybe is PMI. So if you want it less than 3.5% down,
which is private mortgage.
If you want 3.5, you want 5, you want 10, you want 0. All of this is going to be less down, but your conventional loan is going to be there. So even with conventional, you can go 5%, and then you would add PMI.
Exactly. Therefore, now you know what is included in your monthly mortgage.
And we haven't got to the numbers yet. But before we get into the next part, I think we should do our introduction.
Let's hit it.
Hi, it's Alan Victoria. Welcome to our Shannon podcast.
And if this is your first time on our podcast and YouTube channel, make sure you subscribe and get notified.
As we call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below. Whew! Now let's talk about those mortgage types. That way we're talking about them.
Exactly. Therefore, there are some more, we have a lot of different categories of the mortgage, but what the main concern here is really a qualified mortgage, which is in a couple categories, no?
A conventional is going to be ideal if you want the most flexibility, you have 20% down, or you're really focusing on getting rid of that PMI as fast as possible. You want really conventional. Conventional is going to be most of the time.
But conventional, you don't need to put the 20% if you don't want to drive a PMI.
But then you can get rid of it once it hits a certain number. Whereas with FHA, you cannot get rid of PMI once you get the number. You have to refinance. But FHA is great if your interest rate, your credit isn't perfect. Maybe your DTI isn't perfect, you're going to think about FHA at this point. So 3.5% down will get you into a FHA home.
Exactly. And then USDA and VA, thank you for your service. If you're a veteran, you can use the VA or USDA in some of the area of North Carolina.
But your credit has to be better.
Your credit definitely needs to be better. Therefore, now we wanted to talk about...
And then you get 0, right? So you can get into the house with 0.
Mortgage option is the value of a realtor.
Right,
no?
And I'm not talking about every fly-by-night, or you go onto a certain website and they think realtors are like, just call the number and somebody's going to write you an offer for you. Like, just whoever you landed on that day is the best going to work for you. A value of a realtor is going to be way more than that, because if we understand your goal and we understand what you're trying to accomplish with your home buying, we are in a better position to help you achieve your goal. So because we understand our local market, we understand how to negotiate, which houses are more likely to give us what we need if we need to ask for things, which one is going to be more likely, how do we win the house? How do we stay under contract? How do we get the most value for you? So it's not just I fill out paperwork for you to buy a home. There's a lot of skill that comes with trying to help somebody and make sure that you're working with the best person who can help you. Because if you're looking to save money, you want to make sure that you're working with people who are on your side, and there's not someone you're trying to hide information from, because I'm not going to try to sell you on $1 million home if you really only want to buy a $400,000 home. Just throwing an extreme example out there. We go with what you want every single time, and that is something you should definitely be considering of. And if you're getting somebody who's not giving you a feeling that you can't trust them, well, then find someone you can trust.
Therefore, now when we talk about what is included in your mortgage, then talking about what kind of the loan, which is actually fits your profile, that you need to talk to the loan officer and the realtor. Now, we wanted to talk about...
And not all loan officers are amazing either. There's a lot of scams out there too. In fact, on the back end, we've seen it more than once, where a lot of these fees are crazy high, and I know that this is probably a scam. So first thing I say is, how much was your loan application that you paid? Because that's non-refundable, and you're paying to
Now
that
we
lender.
wanted to talk about what to expect as a part of your closing costs, no? Because that's, you wanted to know these numbers.
Right. If you know the numbers, you know what to save. So loan application fees, we definitely work with people who have low numbers, but it can go up to 500.
Up to 500 exactly.
Loan or I can never say
Origination.
that. I can never say it. How much can that be?
Basically, it covers the processing of the underwriting and funding your loan, which usually this loan origination is between 0.5% to 1.5%. Again, depends on your lender. We have varieties of this kind of fee.
And I see these fees high. And low. So we see it on the back end. The next thing that you're going to pay that is going to be out of your pocket, non-refundable, pretty much when you're buying the home is the home appraisal. I'm going to put approximately $600, but it can go between $500 to I think $1,200, depending on how fast that appraisal has to be in there.
Exactly.
And they're really just to make sure that that home is worth the value that the bank and you have agreed. You said that you want to pay X amount of, you paid X amount of money for this home. The bank says, okay, cool, we're down with it. And then the appraiser comes along and says, no, this home is worth Y. Then there could be potentially a problem. Maybe Y is higher and there's no problem. Maybe X is bigger, and then we have to address that. And we've addressed that with our clients more than once.
Exactly. The next thing is real estate attorney fees. In our area is something between $900 to $1,000 that covers of all of the legal services, drafting the contract, and handling all the closing process.
Okay, so drafting the contract is more like states like New York. Here, our closing attorneys are going and getting your title. We must close at a closing attorney's office. They are doing a lot of the closing process for us. They are double checking all of the numbers are correct on both sides. So real estate attorneys are something you definitely have to have here in North Carolina. But real estate agents actually draft the contract that you're under when you're here in North Carolina.
And then you need to pay e-file for the deed.
For nothing.
And to the county or wherever you live
That
in.
extra fee.
That's like an extra
$30
$30 to $50 fee that you need, and basically you need to pay it at the closing cost.
A new government fee that popped up in 2023 was the credit report fee. It used to be $25. It shot up to $99. What will it be next year? I don't know. But I see it often that the lenders are now putting that number towards you, and that's an extra fee.
The title search and insurance fee also is another thing that handles in the state of North Carolina by attorney, and it's something around $500 to $700 that makes sure that no liens or claim against your property that you're purchasing.
Right, so discount points are the next one, which is a maybe. So you might not buy this because you're like, well, interest rates are going to go down. I'm just going to buy down my rate in the future. But if you're looking to buy down the rate right now because you don't care about what's happening in the future, you can pay to get that interest rate lower. It's not always recommended, but it is something that people do. What's the next one?
The next one is the escrow funds, which usually they use at least 2 months. Depends also, again, the lender is not rules that I'm saying here, but 2 months of the mortgage payment usually they set aside for future property tax and insurance payment for you.
Right. So another thing to talk about is those prepaid. With the prepaid, you're paying interest at closing for your first month mortgage payment. So you've already kind of prepaid some interest when you're closing in on that house. It doesn't have to be much, but they're definitely going to ask you for some prepaid interest.
Exactly. And then the next one is the property tax that usually is 1% of the purchase price annually, and also is going to be prorated based off the when you take the home the ownership of the property, and that's closing attorney is going to determine that and then put it in your closing document.
And I noticed, I want to caveat here really quickly where I did add, I said 1%. It's actually a little less in Pitt County, but we are about to go through an evaluation, so I'd rather guess up than guess down. Another thing is that's not really here in our state, but it is in other states, is something called the transfer tax. I've seen this in New Jersey. I've seen this from my people moving from other states where they have to pay 1% of the purchase price to the government for transferring the property to ownership to the other. Again, we don't have that in our state, but it is something to take into consideration.
And then the next one is home inspection fee, which depends on the square footage and what type of you want the home, you want termite. It could be from $400 to $700. That's again is another fee.
And we would highly recommend, because we'd rather know what's wrong with that house. Home insurance is another one. Home insurance, let's just say $1,500 annually. It might be $1,200, it might be less. You are required to have it as it protects the property from damage. It is required by lenders, and typically it's prepaid, so you're paying that at closing.
And next one is recording fee, which is approximately is $90 for local government to basically transfer the ownership from the previous owner to the current owner.
Also, if you are getting a PMI, mortgage insurance premium, whatever loan wants to call it, if it's under 20%, they're going to have to prepay some of that PMI at the beginning, or the MIP as some loans call it. But it's the same thing. They're protecting the lender from default against you. What's another one?
And the next one is the flood certificate, which is like a $9 to $10.
Yes, it's really much just saying, hey, this house is not
If
in
the
a flood zone
property
or is a flood zone. So it's just telling us, is this or is this not in a flood zone? We do have to pay it. It's not like, definitely not, we don't have to pay it. You must pay that. So let's just, now I'm breaking it down with an example, because I mean, all of those are just numbers. So I'd rather give you real numbers in real time. So let's just hypothetically say you want to buy a $300,000 house. Homeowners insurance, you found a deal at $1,200.
And also the property tax, let's say 1%, we went to the high end, $3,000 a year.
Okay, and then your down payment you're choosing, is it going to be your 20%, so that would be $60,000. Do you want to do 3.5%, which would be $10,500, or you want to go USDA with the 0 or VA with the 0? So you do have those options with the down payment.
Yes, and then loan application fee, $300, loan origination fee,
$3,000. Again, I went on the high end.
Therefore,
of our
we
lenders
used that 1% because we said range from 0.5% to 1.5%.
And I tried to go high on all of these. That way you can see what you would need, but it might not necessarily be this high. In fact, quite a few of my lenders that I work with are not as high as what this number is. And there's always deals out there. So that's why having a real estate person is important.
Home
appraisal,
appraisal,
I put $600.
And also, based on the last closing document that we have, real estate attorney was $920.
Yep.
And career fee was $30. What else?
The credit report fee was $99.
And title search and insurance, $500.
For that specific one, I pulled out. Property taxes and escrow, this is approximate because every one is a little different, so I can't just say this is what the last one was. This one was, in this case, they had to pay 3 months ahead. So property taxes in this one for escrow was $750. Which
is 3 months of that $3,000 that we said. Homeowner insurance escrow, as we said, upfront $1,500.
And then also we would have asked you to pay for home inspection. In this case, in this scenario, we went with $400.
Exactly. A mortgage premium, which is
the fee, the funding fee. So even with the VA, you're going to have a funding fee, and this kind of all works the same way. So you have to know what your number is. So I just use 55 as my basis points, but it can go much lower or much higher depending on your credit. So I just went on the high end because it go up to 0.75, and I went with 55. But it can go to 15 as well. So just know I went on the higher end.
This number that we calculated here was $1,650.
Which is basically going to be your FHA fee, your VA fee, or USDA fee. So your total estimated closing in this hypothetical for closing costs only is $9,749. Now, plus your down payment.
Yes.
Which
Therefore,
is what?
if you put 20% down payment on the 300, which is $60,000, or if you go to the FHA realm and you put 3.5% down, which is going to be at $10,500.
And I can also tell you, I have seen this as well. Just one of these things is knowing deals and knowing where the deals are. And that is something a real estate agent is invaluable with. Either that home has been sitting on the market, this one's probably going to give us a deal, or these are new construction options. And this is why new construction has really taken a lot of people, because I can tell you which new construction has what deals and where to go for the deals. And so you're at least starting your home with new and with deals. So I mean,
now the question is how to reduce your closing costs.
Which is what I was talking about, yeah.
No? Therefore, as my wife said, talking about the concession, and definitely do your due diligence.
Or those new construction.
Get the loan estimate.
Yes.
that they give you different lenders, at least 2 lenders, and then compare them side by side.
I would ask for the origination fee. I know I can't say that word, but the origination fee right up front before I even put my Social Security in there. I want to know how much are they going to charge me, because origination fees can be the killer of down payment. So you want to find people who give you that best fee out there possible. Or do they break it down? I've seen it happen a couple times where they say it's low, but then they have all these other fees that other people don't have. So get a full accounting of what their fees are. So you can really understand what their closing costs are before you even submit the documents. What else can you do?
Exactly. And then ask for the assistant program if they have that lender. That's also another question that you can ask. If they want a down payment assistant or something for FHA or for some home buyers. This all helps you to do some due diligence before you actually put your Social Security number there.
Now, the next thing I want to talk about really quickly is the way people typically find this money. Right? So this money is not something that's always easy, and there's some things that people forget. So number one is savings, right? People will just simply put the money aside to save for their down payment and their closing costs. They came up with a number, they put this money away. And you don't always need everything you saved for, by the way. So oftentimes when you work with a reputable person, we get you deals, and then deals will help you save money. Other ways, what's another way people save money?
You can use the retirement fund too, no?
Oh, you went to the retirement fund. That is on the list. He just went down. You can borrow from your retirement fund. IRAs, 401ks, they typically have an exception for home purchase prices. Find out what those exceptions are. That way you can take that withdrawal. But there can be limits and there can be rules. So find out what those rules are.
And you can get the gift from friends or family members, but you need to basically pay attention that you communicate with your lender before you do that to see what documents you need to be submitted.
Now, a lot of loan lenders are also going to work with a lot of these assistance programs. So don't just go online and say who has the best deal, because that deal might not ultimately be the best deal for you. So find out what banks work with what deals, of course, but find out who's giving you grants, who has those low interest loans. Maybe you can get some deferred payments out there as well. So find out who's giving the deal. What's another option?
Employer assistance. That some of employers, they have the home buying assistant as a part of their benefit package. Definitely find out about your employer, especially if you are living in a high costly area, no?
Right.
Living costly area.
Last thing I'm going to mention is this is not for first time home buyers, but it is for second. So if you own a home already, taking the income from the previous sale and buying the new one means that you could be walking into a brand new home with much less cost than you imagine, because that sale alone is going, and then you're going to save money because you're not actually taking the money and you're putting it towards another house. So that sale of your previous home will be transferred to the next one.
Exactly. And the next one that we wanted to talk about is government-backed loans. That's which we talk about VA, thank you for your service, and also USDA and FHA. Those are from the government, U.S. Department of Agriculture and Federal Housing Administration. That's basically you can, with the VA and USDA, you pretty much don't have any down payment.
I have seen us get homes for people with a few $1,000s, be like $2,000. I've even seen it, I've seen it for like $2,000. It's the lowest I've ever seen for government-backed loans, fully funded, and getting someone closing cost as well. I've never had 000. I would love it. I would love to be, you want to try? We'll do it. Let's try. The second one, another one that I've seen, and I really highly respect this, is I had somebody who said, I need savings. I don't have savings and I have debt. What did they do? They got a second job. They got a side hustle, even if that is only for the 6 months, a summer job, but to pay the debt, to pay off the debt and to have some money to save. So they have really took that second job to save money, which is a great thing. And what's the other way? How did we do it?
The tax refund?
Yeah. So we bought our first home by just simply putting the tax refunds aside. So that is something else you can just think about as well.
Exactly. And thank you being patient. This video was longer than we expected.
But we're saving you money.
Please call us at 252-327-3357. We'd love to help you. And also don't forget to leave us a comment and connect with us. And see you in the next podcast and video.